Okay, a change in pace for you next. Let's bring you the latest business roundup. I'm joined by France 24's Catherine Bennett. Catherine, the chances of getting a Brexit deal are slimmer and slimmer by the hour, you could say. What effect is this having on the finance sector, particularly in the UK?
Well, the Bank of England published its financial stability report earlier today. And in that report, it says that UK banks are resilient, that they've built up these buffers since the 2008 financial crisis, and that UK banks will continue to be able to lend and support UK households through the end of the pandemic and the end of the Brexit transition period. However, that report also came with a caveat. They said that, of course, with a no-deal Brexit, there will come disruption to financial services further down the line. Now, we're already seeing that in the banking system. There are a number of banks that have already shifted their operations to offices in Europe. They've moved operations to offices in Amsterdam, Frankfurt, or Paris. And a Bloomberg report said that the US investment bank Morgan Stanley is just the latest bank to move the bulk of its operations to Europe. It plans to move 100 billion euros in assets to Frankfurt, and that will happen in the first quarter of next year. Now, more widely in the sector, non-German lenders are moving 400 billion euros in assets to the country by the end of the year. JP Morgan is one of them. It's going to be moving 200 billion euros in assets and 200 staff to Frankfurt. And the company says that that is just the first wave of moves, and there will be more to come. And the Commonwealth Bank of Australia is just another bank that this week said it will move its European headquarters out of London to Amsterdam. So we're seeing that really across the board. Now, in trading in Europe today, we're seeing the result of that. Investors have been pricing the risk of this no-deal Brexit. The EU market's looking pretty dismal in today's trading as a result, with the FTSE and the CAC 40 both down by 0.75% and the DAX down by more than that, by 1.33%. Now, over on Wall Street, stocks are also down for the third day in a row, and that's because of talks of a different kind. These are the talks on a coronavirus relief bill that have been dragging on for weeks. Now, senators are running out of time. A number of financial aid schemes will be running out by the end of the year, and if there is no stimulus bill agreed on by the end of the year, millions of Americans could lose their unemployment benefits in January. So there's that pressure weighing on markets. The S&P 500 is down 0.25%, the Nasdaq down almost 0.5%, and the Dow Jones just gaining a little bit further and up only by 0.1%.
Now, it hasn't got much attention this week, Catherine, but the UK has actually signed some other trade deals.
Yes, and I think the noise of these trade deals has been buried a bit beneath the noise of the EU-UK Brexit talks. So there has been very little fanfare around these deals, but Singapore and Vietnam have both signed trade deals with the UK. And the reason there hasn't been much noise about them, perhaps, is because they're simply replicating the trade deals that exist already between these countries and the EU. And that's also what happened with the first major post-Brexit trade deal that the UK signed. That was with Japan back in October. And again, that was the same thing, where it simply replicated the pact that Japan already had with the EU. Now, the trade deal with Singapore signed this week. It covers £17 billion worth of trade in goods and services. And so that means that trade between the two countries can simply carry on as before from January the 1st. There's a similar thing with Vietnam as well. Now, the trade deal with Vietnam cuts or eliminates 99% of tariffs on goods traded between the two countries. And both of these trade deals are part of the UK's strategy to eventually join the Comprehensive and Progressive Agreement for Trans-Pacific Partnership. Now, that's a trade bloc encompassing 11 countries in the Asia-Pacific region. And the reason the UK wants to join that is because, of course, it wants to diversify its supply chains. Now it's losing its biggest trading partner in the European Union. And also joining this trading bloc would give it access to a huge market, which prior to the pandemic was expanding rapidly.
Just a final question with you, Catherine. France's public debt looks set to rise even further in 2021. I mean, the government has laid on extra support for businesses who were hit hard by the coronavirus. With a number of coronavirus infections rising again, just talk us through what the government's actually announced.
Well, the French government said today that it will be raising the budget deficit and the public debt forecasts for 2021. So what that means exactly, the public sector budget deficit is forecast to reach 8.5% of GDP. That's up from 6.7%, which was forecast back in September. And the government has said that this is because they've piled on this extra support for companies since the country was put into the second nationwide lockdown in November. That's due, of course, to continue until December the 15th. And the public debt burden, as a result, is set to rise to a record 122.4% of GDP next year. Now, that's also up from an estimate of 116.4% of GDP, and that was forecast back in September. Now, Bruno Le Maire, the country's finance minister, has said that 20 billion euros will be going to prop up the economy in 2021. A part of that, amongst that, in the 2021 budget, they will be directing targeted support to certain sectors that have been suffering because of the pandemic. Amongst them, 250 euros will be going to airports, which have unsurprisingly been struggling, and 400 million euros will be going to shuttered ski resorts in the country.
All right, bringing us that roundup of the business news. Catherine Bennett, thank you.